you, the Competition Commission of India will begin its probe against IndiGo and assess its market dominance. This comes after the mass cancellations that we saw in the month of December. Also on the show, Anthropic AI is disrupting not just the AI space but also tech stocks and the fortunes of investors. Just how long is this pain going to last? Amit Kumar Gupta will be joining us on the show to give us his point of view. And of course, in our international segment, Xi Jinping and Donald Trump held a phone call. And it seems that tensions are thawing between the two. G2, as Trump puts it himself, and China agrees to buy US soybean. All this and more, you're watching Morning Brief at 9. This is Morning Brief at 9 this Thursday morning. Here are the headlines we're tracking for you. India and the Gulf Cooperation Council to sign terms of reference today, formally launching talks for a free trade agreement. India free to choose oil suppliers, Kremlin says amid US President Donald Trump's trade deal claims with India. External Affairs Minister Dr. S. Jaishankar, US Secretary of State Marco Rubio and other leaders attend the Critical Minerals Ministerial in Washington, D.C. External Affairs Minister holds a detailed review of bilateral cooperation, meets Canada and Peru counterparts and calls for de-risking critical mineral supply chains. Prime Minister Narendra Modi to visit Malaysia from February 7th to 8th to boost India-Malaysia comprehensive strategic partnership. French President Emmanuel Macron likely to visit India from February 17th to 19th to boost innovation, AI and defense ties. And further trouble in fact mounts for IndiGo as Competition Commission of India initiates investigation into the large-scale cancellation of flights in December. IndiGo accused of misusing its dominant position and deliberately cancelling a significant number of flights. Air India clears all Boeing 787 Dreamliners after fuel control switch inspections find no issues. Gold jumps nearly 2% to $5,039 an ounce and silver surges 6% to $89 amid renewed buying. Alphabet bets big on India, expands India footprint by leasing Bengaluru office tower with expansion options. Those are the headlines. On to the stories. Now, India is set to take another major step in its global trade push. On Thursday, India and the Gulf Cooperation Council, or GCC, will sign the terms of reference for a free trade agreement, formally kick-starting negotiations for a comprehensive trade pact. The signing of the terms of reference is significant as it defines the scope, rules and framework under which the proposed FTA will be negotiated. The finalization will be presided over by Commerce and Industry Minister Piyush Goyal. The move comes at a crucial moment for India's trade diplomacy. Just 3 days ago, India and the United States announced a trade deal under which Washington slashed tariffs on Indian goods from 50% to 18%. Last week, India also concluded negotiations for a long-pending free trade agreement with the European Union. Now, India already has trade agreements with the GCC members, the UAE and Oman. The India-UAE Comprehensive Economic Partnership Agreement, or CEPA, has been in force since May 2022, while the India-Oman CEPA was signed in December 2025. Negotiations are also underway with Qatar, while Saudi Arabia, Kuwait and Bahrain are the other GCC members. Now, FTA talks between India and the GCC are not new. They began with a framework agreement in 2004, saw limited progress in 2006 and 2008, and were paused when the GCC suspended negotiations globally in 2011. Talks resumed after the GCC Secretary General's visit to India in 2022. In FY25, India's GCC trade touched nearly $179 billion. This accounted for over 15% of India's global trade. While India imports crude oil and natural gas, it exports gems, metals, machinery, chemical and steel, making this deal economically and strategically critical. And amid claims by US President Donald Trump himself that India has agreed to stop buying Russian oil, the Kremlin has pushed back, making it clear that New Delhi remains free to source energy from any country. Reacting to the statement, Kremlin spokesperson Dmitry Peskov and Russia said that Russia is not India's only oil supplier and that India has long purchased crude and petroleum products from multiple nations. He also added that there was nothing new in India buying oil from sources other than Russia. Now, Peskov was responding to US President Donald Trump's assertion that under the India-US trade deal, New Delhi has agreed to stop buying Russian oil and shift purchases to the United States and possibly even Venezuela. A day earlier, the Kremlin said that it had received no official communication from India about halting Russian oil imports. Meanwhile, Russia has reiterated that the hydrocarbons trade remains mutually beneficial. With Russia oil accounting for just 0.2% of India's imports until 2021, India became the largest buyer of discounted Russian crude after Western sanctions following the Ukraine war. And with that, we will slip into a very short break, but a lot more coming up, especially the talks between Dr. S. Jaishankar and Marco Rubio. We'll get you all the inside details on the other side of the break. You're watching Morning Brief at 9.
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
रिश्तों को रंग दो, दुनिया को रंग दो।
बिरला ओपस पेंट्स।
वकील साहब, अच्छी खासी प्रैक्टिस है, नया फील्ड में क्यों जाना?
सिस्टर, सिस्टर देश का सोच रहे हैं
और इसके फ्यूचर का नहीं सोच रहे।
SBI लाइफ से अपनी बेटी का फ्यूचर सिक्योर है।
तभी तो इनको अपने इरादे पूरे करने का राइट है।
पढ़ो पढ़ो, देश की कई बेटियों का फ्यूचर सिक्योर करना है।
करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
This isn't a trail of peace. This is pressure overload. A hill built for 1,000, forced to carry lakhs.
Instead of lightening the footprint, you have allowed people to actually get into every nook and corner of the Himalayas.
Careless travel, choking hills. If we don't change now, there won't be much left to enjoy.
We need to follow the Bhutan model, regulate people who can access hills.
News9 presents Heal the Hills, continuous coverage.
Welcome back. You're watching Morning Brief at 9. On to India's talks with Washington. Well, External Affairs Minister Dr. S. Jaishankar has held a series of high-level bilateral meetings on the sidelines of the Critical Minerals Ministerial in Washington, engaging with key global partners including Canada and Peru. Jaishankar met Canadian Foreign Minister Anita Anand, describing the interaction as positive and forward-looking. In a post on social media platform X, the External Affairs Minister said it was great to meet his Canadian counterpart and the discussions focused on taking bilateral ties with Canada forward. The External Affairs Minister also held talks with Peruvian Foreign Minister Hugo de Zella, with both sides agreeing to deepen cooperation across key areas. Now, these engagements come as India steps up its focus on critical minerals vital for clean energy, electronics and advanced technologies. Addressing the ministerial hosted by US Secretary of State Marco Rubio, Jaishankar called for structured international cooperation to de-risk global critical mineral supply chains. He warned that the excessive concentration of production and processing in a few countries poses a serious risk to global economic and technological security, highlighting the need for diversified supply networks.
The main reason I came was that there was a critical minerals ministerial which was convened by Secretary of State Marco Rubio. There were a number of countries, I think about 50 odd countries which were here. So that meeting took place today. In fact, it's still going on. I took a break from that. That was the principal reason. It was a very good discussion. Critical minerals is a very important subject. The US has been a partner for some years. Today they launched a new initiative called Forge, which we have supported. It's a kind of successor to the Mineral Security Partnership.
Right, Dr. S. Jaishankar there speaking from Washington. And we also have some inside details of the meeting between Dr. Jaishankar as well as US Secretary of State Marco Rubio in Washington, who discussed formalizing cooperation on critical minerals, including exploration, mining and processing. Here's the story.
A day after the announcement of the highly anticipated trade deal between India and the US, Foreign Minister S. Jaishankar met US Secretary of State Marco Rubio in Washington, and the two discussed formalizing bilateral cooperation on critical mineral exploration, mining and processing. In a post on X, Foreign Minister said that both leaders agreed on early meetings of various mechanisms to advance our shared interests. S. Jaishankar, who is on an official visit to the US, held discussions on several facets of India-US strategic partnership, including trade, energy, nuclear, defense, critical minerals and technology during the meeting. According to a statement issued by Principal Deputy Spokesperson Tommy, Rubio and Jaishankar welcomed the India-US trade deal reached between President Donald Trump and Prime Minister Narendra Modi.
The two leaders emphasized the importance of our democracies working together to unlock new economic opportunities and advance our shared energy security goals.
Secretary Rubio and Minister Jaishankar concluded their meeting by expressing their commitment to expanding bilateral and multilateral cooperation through the Quad. They acknowledged that the prosperous Indo-Pacific region remains vital to advancing our shared interests. India and the US agreed to a trade deal under which Washington will cut the reciprocal tariff on Indian goods to 18% from current 25%. President Trump said on Monday that after a phone conversation with Prime Minister Narendra Modi, the US has also scrapped the additional 25% tariff which was imposed on India over its purchases of Russian oil. After India and US reached the trade agreement, which is yet to be finally and officially announced, the New Delhi is set to reduce its tariffs and non-tariffs barriers on American products potentially to zero. Notably, in trade terms, This signifies an principal commitment to lower or phase out the duties on selected US products. Now, reports suggest that commitment does not mean that import duties will be eliminated from all the products. The announcement does single a thaw in India-US ties, which had been marred by steep tariffs recently. Despite the high-profile announcement, several aspects of the agreement remain unclear. Trump's post did not specify how trade barriers would be reduced or which US products India had committed to buying. Officials on both the sides are yet to release a detailed framework of the India-US trade deal.
And on to other trade talks that India is holding with its partners. Prime Minister Narendra Modi will pay an official visit to Kuala Lumpur, Malaysia from February 7th to 8th at the invitation of the Malaysian Prime Minister. Now, this will be Prime Minister's third visit to Malaysia and the first since India and Malaysia elevated their ties to a comprehensive strategic partnership in August 2024. Now, during the visit, Prime Minister Modi will hold bilateral discussions with his Malaysian counterpart. The Prime Minister will also interact with members of the Indian diaspora as well as industry and business leaders. The 10th India-Malaysia CEO Forum is scheduled to be held during the visit. India and Malaysia share long-standing historical, cultural and civilizational links, further strengthened by a 2.9 million strong Indian community in Malaysia, the third largest Indian diaspora anywhere in the world. The Ministry of External Affairs said the visit will allow both leaders to review the full spectrum of bilateral cooperation, including trade and investment, defense and security, maritime cooperation, digital and financial technologies, energy, healthcare, education, tourism, as well as people-to-people ties, while setting the roadmap for future engagement. And French President Emmanuel Macron is likely to visit India from February 17th to 19th in a visit expected to further deepen the India-France strategic partnership with a strong focus on innovation, AI and defense cooperation. Sources say President Macron's India visit may begin from Mumbai, where he is expected to participate in the India-France Year of Innovation program. The French president will also travel to New Delhi to take part in the AI India Summit, underlining the growing cooperation between the two countries in emerging technologies. During the visit, bilateral talks with Prime Minister Narendra Modi are proposed, with discussions expected to cover defense, technology, trade and strategic cooperation. A large high-level delegation will accompany President Macron, including several French ministers and leading business figures. Sources indicate that major announcements are likely in the defense sector, further strengthening military and strategic ties between India and France. France's defense minister is also expected to visit Bengaluru, reflecting the focus on defense manufacturing, aerospace and industrial cooperation. Now, apart from the AI summit in Delhi, President Macron may participate in multiple engagements across sectors, highlighting the expanding scope of India-France relations. And on to corporate news now. The Competition Commission of India has ordered a detailed investigation into the country's largest airline, IndiGo, after finding prima facie evidence of abuse of dominant market position. Now, in an order issued on Wednesday, the antitrust watchdog said that its preliminary assessment showed IndiGo may have caused an appreciable adverse effect on competition by restricting services. The case relates to widespread flight disruptions between December 1st and 9th and period of peak travel demand. The Competition Commission also noted that IndiGo had cancelled over 4,200 flights during this period, accounting for a major share of its scheduled capacity. Now, according to the CCI, this effectively amounted to withholding services from the market, creating artificial scarcity and limiting consumer access to air travel. In its 16-page order, the CCI said such conduct by a dominant enterprise could amount to restricting the provision of services under Section 4 of the Competition Act. The watchdog also observed that given IndiGo's market dominance, consumers had limited alternatives, effectively locking them into the airline. The Commission has now directed the Director General of Civil Aviation to carry out a detailed probe and submit an investigation report within 90 days. IndiGo, in its submission, argued that the Competition Commission does not have jurisdiction to examine issues arising from sectoral regulation. The airline said matters linked to flight operations and disruptions fall exclusively under the DGCA, and any CCI intervention would amount to regulatory overreach. The disruptions were triggered after the DGCA enforced stricter pilot rest and duty norms, which reduced night flying hours and increased weekly rest requirements. The CCI cited extensive market data to underline IndiGo's dominant position in India's aviation sector. And Air India on Wednesday said it has completed inspections of fuel control switches across its entire Boeing 787 Dreamliner fleet, and no issues have been found. The airline had ordered the checks earlier this week following an incident involving an Air India Boeing 787 after a pilot reported a possible defect in the fuel control switch. The incident occurred on Sunday during the engine start of flight AI 132 from London Heathrow to Bengaluru, which had over 200 passengers on board. Now, according to Air India, the fuel control switch of the aircraft's left engine did not latch in the run position twice during engine start. On the third attempt, the switch was properly locked and the aircraft later operated normally. Now, as a precaution, Air India grounded its 33 Boeing 787 aircraft on Monday, of which 28 are currently in operation pending inspection. In a statement, the airline said no technical faults were identified and that the checks were carried out purely as a safety measure. Air India also acknowledged the regulator's proactive oversight and said it will circulate OEM-recommended operating procedures to all crew members. The airline reiterated that the safety of passengers and crew remains its highest priority. And it was meant to be a flat start to the day, but it seems that it is a little bit in the red territory. We'll get you all the market action and also Anthropic AI's disruption to IT stocks. Amit Kumar Gupta will be joining us after this break. You're watching Morning Brief at 9.
जब 25 साल के प्रत्युष का किडनी का ऑपरेशन हुआ तो पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर 12 लाख का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
With Skoda Supercare and growing network across 180 plus cities, you never drive alone.
Skoda. वकील साहब, अच्छी खासी प्रैक्टिस है, नया फील्ड में क्यों जाना?
सिस्टर, देश का सोच रहे हैं
और इसके फ्यूचर का नहीं सोच रहे।
SBI लाइफ से अपनी बेटी का फ्यूचर सिक्योर है।
तभी तो इनको अपने इरादे पूरे करने का राइट है।
पढ़ो पढ़ो, देश की कई बेटियों का फ्यूचर सिक्योर करना है।
करो पूरे अपने इरादे,
अपनों से किए सभी वादे।
SBI लाइफ अपने लिए,
अपनों के लिए।
Welcome back. You're watching Morning Brief at 9. Time now to talk about the markets and stocks. And well, it seemed that the Anthropic AI tool, which has disrupted the entire IT space in the US, would have, after yesterday's almost 7% flat, 7% fall that we saw in IT stocks, we thought that that would likely continue even in market outlook today. But it seems that IT stocks are not the worst hit. There seems to be an overall consolidation happening after the rise that we saw in the post effect of the India-US trade deal announcement. As markets open, it was meant to be a flat start. At least that is what the indication was as far as other Asian peers and GIFT Nifty data was concerned. But markets have taken a little bit of an overdose of correction, it seems, this morning, with Sensex and Nifty both down about 1/3 of a percentage point. Nifty 50 right now below that 25,700 mark, and Sensex below that crucial 84,000 level. In fact, even below the 83,600 odd levels as we speak right now. Volatility in the Indian markets is a little higher as compared to this time yesterday, but still below that 13 level, in the vicinity of that comfortable 12 range. The small cap and the mid cap space also moving almost in tandem with the broader market view. Let's pull up the Nifty 50 heat map and see which are the sectors which are adding to the pain this morning. As it seems that that it's the BFSI space, the consumer durable space, the energy mineral space, as well as the health tech space, all the sectors that had shot up handsomely after the announcement of the India-US trade deal are now looking at some correction on their books. Meanwhile, the IT stocks, which had taken a massive beating yesterday, remember, Infosys, TCS were down more than 7% in trade yesterday. There seems to be a little bit, just a little bit of buying action there. Some consolidation even on the Reliance stock, which had surged beautifully yesterday. And we are also seeing ONGC, which was up at some point about 3% yesterday, continuing on its uptrend. In the consumer non-durable space, the FMCG space, the biggest gains seem to be coming early morning from Hindustan Unilever. So that's the overall view of markets as they open right now. We have Amit Kumar Gupta, the founder of Fintrek Capital, joining us this morning with his perspective on what we are seeing in the market and whether now there could be some sort of trend lines that could be established moving forward. Amit, thank you so much for your time. First up, pure play case of consolidation after the rally that we saw day before yesterday. IT stocks getting hammered down yesterday and some consolidation in stock positions this morning.
Yeah, hi Karthik, good morning. Thank you for having me. Yes, I think after a gap up which was done because of the US-India trade deal, there seems to be a little bit of a consolidation. Obviously, the IT stocks were under pressure because of the new legal tool from Anthropic's Claude, large LLM. So the IT stocks have been under pressure, which is pulling down Nifty a little bit. So market is trying to consolidate. It's still holding up key levels of 25,500, 600 kind of a levels. So we'll see, how things end up by tomorrow when RBI policy is also due.
Absolutely.
Yes,
we will talk about the RBI MPC also in just a moment. But IT stocks are seeing some buying action this morning. In fact, looking at the charts, Infosys has recouped some of its losses from yesterday. The stock is up about, almost 0.75% or so right now. TCS also in the green, up about 1/3 of a percentage point. So overall, yesterday's massive dips that we saw, a good time to buy IT stocks, or do you think the kind of disruption that we are seeing with AI, especially with the Anthropic tool that you spoke about just a moment ago, are we likely to see a lot more AI disruption and hence perhaps being careful, cautious on IT stocks is a better sentiment, or good valuations right now to dip into that sector?
See, I think, the success of these AI LLMs, this is far from guaranteed, given that they lack the specialized data crucial to businesses in the industries. So this sell-off is more like reflecting a scramble to shield portfolios as the rapid advances in the technology, muddy valuations and business prospects beyond the standard 1 to 2 year. So my sense is that sell-off, which has started last quarter, is a manifestation of basically everyone awakening to how disruptive AI could be. It was always disruptive, but there are always layers to it, and this new LLM actually impacts a lot of industries in coding, marketing, sales, and legal. So suddenly the wide moats of many of these companies feel a lot more narrow today as competition from AI created product intensifies. So probably it's an overreaction, but the threat is real and valuations must account for that. So, but the IT services companies in India is not really AI LLM driven, though they get directly impacted from it.
Right. Okay, fair enough. Another impact point for India's IT stocks specifically are also going to be perhaps interest rates moving forward, but more so from US and India. But we will talk about the India interest rate expectations also. I'm also looking at steel stocks this morning, the non-energy minerals. Now, again, while we await the joint statement from India and US on the final contours of the India-US trade deal, the The entire steel and aluminium space had a fixed tariff, like did the auto components. But, with this 18%, that confusion continues. We saw a massive rally on the day of the announcement of the trade deal. But this morning, we are seeing a great correction. Tata Steel is down about 1.3%. Hindalco is down about 3.5% or so. Amit, what do you make of this sector right now?
So I think that's just a reaction of what the US markets were doing or the China markets were doing this morning. My sense is that there are a lot of issues with the trade deal which was announced. There is no really timeline when these reduced tariffs actually go into place. I think there is a lot of deficiency in that. It will get resolved within time, probably 1 month, 2 months, I don't know. It will take some time. So till that time, obviously the stocks had a good reaction on the day of the announcement, but it's more like consolidation. So I'm not too much worried about these 1%, 2% moves as such. But the larger picture is that if the tariffs are reduced in a decent staggered manner over the next 1 or 2 months, then the upside can be substantial even from here in the metals and commodity stocks.
All right. And what do you make of the latest phone call between US President Donald Trump and Chinese Premier Xi Jinping? Reports coming in that perhaps China has opened up its agri sector and is now willing to buy soybean. More pressure for India to give in?
So I think these are all geopolitics, and we are living in a multipolar world where negotiations keeps on happening on various things. Yeah. Soybean is a very important component of the US and China deal. So China have obviously put a lot of restrictions and tried to pressurize US in reducing tariffs last year. I think some of that has put into perspective now, where there are more negotiations to reduce the tariffs and increase the market exposure to soybeans. India is not a very big player in soybean, so it should not really impact in that sense.
All right, no impact really on India. Now, a day before RBI is set to announce its decision as part of its Monetary Policy Committee, expectations are that perhaps there's going to be a pause and there is not going to be another rate cut, given that inflation numbers are benign. So what do you make of inflation-specific sectors, rate cut-specific sectors, whether it's the BFSI space, whether it's the auto space, or even for that matter, the FMCG space, Amit?
So we are actually with the market consensus camp. We expect that RBI will keep the policy rates unchanged and the stance as neutral tomorrow as well. We already had 125 basis points of easing last year. And with the significant portion of easing already delivered, the RBI would probably adopt a wait and watch approach, placing greater emphasis on monetary transmissions. India's 10-year bond yield has obviously continued to remain elevated despite the cuts, and the CPs and the CD rates have also risen. So the focus is much more on the liquidity management than a rate action. As far as BFSI is concerned, the liquidity conditions in the banking system have remained constrained over the past few months, limiting the effectiveness of monetary easing. So the banking sector liquidity, which is measured like the percentage of NTDL, that has stayed below 1% for the last 5 months. And in fact, in January, it was 0.2%. So there is persistent pressure on the exchange rate because of that. And RBI also has to intervene, limiting the effect of the OMOs, which they are doing by sapping the liquidity. So in that sense, I think now things are much more better conditioned with this trade deal between US and India. That could support foreign flows and INR, which can give RBI a little bit leverage to manage the domestic liquidity. So the macro picture remains good, but I think RBI would probably remain in wait and watch mode and see how things unfold on the trade front.
All right. And what about the FMCG space? Because we are seeing Hindustan Unilever up almost 2% or so in trade this morning. Is there a specific trigger, or again, this is just a good valuation purchase?
I'm not so sure about actual. I don't really track the stock as well. Okay. So unless there is a stock-specific news, I'm not aware about that.
Okay. But is this also going to be something which would be interest rate specific, or do you think FMCG is completely out of whatever action RBI takes?
Yeah, generally, if there is a anticipation of liquidity easing and rates going down, then FMCG as a pack, gets benefit from that.
Overall outlook going forward, last question to you, Amit, this morning. Outlook for this quarter, let's say at the end of this financial year, as far as the benchmark, Sensex and Nifty are concerned. Are we likely to see, with all that we are seeing and potentially, details about India's trade deal also hopefully emerging in a few days from now, are we looking at Sensex, Nifty touching their lifetime highs and crossing their lifetime highs and staying in that territory for a while to come? Or do you think it's all at this point going to be just speculation and the devil is going to be in the detail?
No, I do agree with you that the devil will be in the details. How fast we can get those details about the US-India trade deal, that would depend. If the details comes in over the next 2 to 3 weeks, then we can definitely see Nifty touching all-time highs. Already, Bank Nifty is almost at all-time high. The mid caps are also catching up near close to all-time high. So I think we need a little bit more detail so that market feels more confident about the prospects going forward and position accordingly. The details are very critical for the market up move.
Right, let's leave it at that. Amit Kumar Gupta, thank you so much for your time and a pleasure having you here with us on News9.
Thanks, Karthik.
And with that, let's quickly take a look at some of the global stories we are tracking for you this Thursday morning. China's President Xi Jinping holds parallel talks with Donald Trump and Vladimir Putin, hailing tighter China-Russia ties while urging mutual respect with Washington amid rising global tensions. The Trump administration calls for preferential trade bloc among U.S. allies to secure critical minerals vital for AI, chips and defense, a rare multilateral pivot as Washington seeks to blunt China's dominance. From urging Republicans to nationalize voting to repeating false stolen election claims, Donald Trump intensifies rhetoric that critics warn could undermine democratic institutions before the midterm polls this year. US and Iran reportedly plan nuclear negotiations in Oman on Friday after reports of talks close to breaking down over disputes on venue and format. Google parent Alphabet reports blockbuster earnings. Revenue jumps 18% year-on-year as AI-powered cloud services push annual sales past $400 billion for the first time. The Washington Post, owned by Jeff Bezos, unveils sweeping layoffs, citing painful changes needed to survive a brutal media downturn. Ukrainian President Volodymyr Zelensky reveals staggering battlefield losses of as many as 55,000 troops, adding that a large number of soldiers remain missing as the war grinds on. Telegram founder Pavel Durov backs Elon Musk, calling Spain's under-16 social media ban dangerous and a threat to digital freedoms. And Amazon plans to deploy AI across film and television production, stoking fears in Hollywood of job losses and a permanent reshaping of the entertainment industry. US President Donald Trump and Chinese President Xi Jinping held what Trump described as a long and thorough phone call on Wednesday, discussing trade ties, Taiwan and other geopolitical flashpoints ahead of a planned in-person meeting in the month of April. Trump said Beijing had agreed to ramp up purchases of American soybean energy supplies and aircraft engines, while Xi Jinping called for differences between the world's two largest economies to be resolved through dialogue. But tensions surfaced over Taiwan, with the Chinese leader urging Washington to act cautiously on arms sales to Taiwan. US Vice President J.D. Vance has unveiled a new plan to build a preferential trade bloc for critical minerals aimed at coordinating with allies and setting price floors to counter China's dominance in resources vital for advanced manufacturing and emerging technologies. The proposal signals Washington's latest push to reshape global supply chains as geopolitical competition over strategic minerals intensifies. Take a look.
The Trump administration is proposing a concrete mechanism to return the global critical minerals market to a healthier, more competitive state.
U.S. Vice President J.D. Vance on Wednesday unveiled plans for a preferential trade bloc with allies aimed at boosting access to critical minerals in a bid to loosen China's grip on the market.
We will establish reference prices for critical minerals at each stage of production, pricing that reflects real-world fair market value. And for members of the preferential zone, these reference prices will operate as a floor, maintained through adjustable tariffs to uphold pricing integrity. We want to eliminate that problem of people flooding into our markets with cheap critical minerals to undercut our domestic manufacturers.
Secretary of State Marco Rubio said 55 countries attended the talks in Washington. Among them were South Korea, India, Thailand, Japan, Germany, Australia, and the Democratic Republic of Congo, all with varying refining or mining capabilities.
And I think there's a growing global recognition that we need to have supply chains for critical minerals that are reliable and diverse across the world. Some countries have a number of critical minerals that they have available to them in terms of mining, but just haven't been able to do it because a foreign competitor will come in. They'll gut the price, they'll undercut it through state subsidies and unfair practices, and so it becomes economically unviable to be able to explore for critical minerals.
The plan comes as the U.S. escalates its efforts to loosen China's chokehold on the processing of materials that are crucial to advanced manufacturing. As part of that effort, Trump on Monday launched a U.S. strategic stockpile of critical minerals called Project Vault.
Just as we have long had a strategic petroleum reserve and a stockpile of critical minerals for national defense, we're now creating this reserve for American industry, so we don't have any problems.
The Trump administration stepped up efforts after China withheld rare earths required by American automakers and other industrial manufacturers last year, rattling senior officials and global markets. China's embassy in Washington told Reuters that China, quote, has long played an important and constructive role in keeping the global industrial and supply chains of critical minerals safe and stable, and pledged to continue its efforts. Washington hopes that by guaranteeing minimum prices through coordinated trade rules, it will unlock private investment in mining and processing projects that have struggled to compete with cheaper Chinese supply. That approach could reshape global supply chains for materials essential to electric vehicles, semiconductors, and defense systems, while raising costs for manufacturers in the short term and escalating trade tensions with China. Shares of mineral companies fell on Wednesday after news of the trade bloc.
Meanwhile, the European Union is also moving ahead with plans to build strategic stockpiles of critical minerals, with Italy, France and Germany expected to take the lead as Brussels looks to reduce dependence on China. Now, the proposal includes the joint reserve system and potential export restrictions on reusable metal scrap and rare earth waste. Take a look.
The European Union is moving ahead with plans to stockpile critical materials. That's what sources told Reuters, with Italy, France and Germany due to take leading roles. The EU unveiled a plan in December to lower its reliance on China for key raw materials. It includes a joint stockpile and export restrictions on reusable metal scrap and rare earth waste. However, the European Commission is yet to provide details. China is the world's largest producer of industrial metals and minerals. Beijing placed export controls on a number of critical minerals and rare earths over the last 3 years. That's hit supply chains for manufacturers outside the country. Europe lacks refining capacity and faces long lead times to diversify. And so strategic reserves are seen as one of the few tools available to protect its economy against China's export curbs. It's also considered a way to safeguard defence production and protect energy transition aims. The sources said France will work on financing purchases and Germany will handle sourcing, while Italy will take charge of storage. Italy and Germany have already pledged to work together to secure raw material supply chains needed by their industries. A Commission spokesperson didn't immediately reply to a request for comment.
U.S. Treasury Secretary Scott Bessent defended President Donald Trump's right to openly criticize the Federal Reserve, telling lawmakers that the central bank's independence ultimately rests on public trust, something he says was damaged when inflation surged and hurt American households. Now, speaking at the House Financial Services Committee hearing, Bessent also reiterated his support for a strong dollar policy while weighing in on the debate around Fed autonomy. Listen in.
So then you believe in, I'm assuming, the independence of the Federal Reserve?
I believe in the independence of the Federal Reserve, but I also believe in accountability.
I mean, can you explain how you put those two together?
Sure. I would welcome, we've seen these cost overruns at the Fed. The Fed has the independence of the Fed is based on its trust with the American people. And the Federal Reserve lost the trust of American people when it allowed the greatest inflation of 49 years to ravage working people in this country.
And on to Wall Street now. U.S. tech stocks remained under pressure even on Wednesday as investors rotated away from high growth names and auto industrials and other old economy sectors. While the Dow pushed higher, the Nasdaq slid for a second straight session, dragged down by a sharp sell-off in chipmaker AMD and lingering worries about disruption in the AI space. Take a look.
Wall Street's main indexes ended mixed on Wednesday, with the Dow up about 0.5%, the S&P 500 down about 0.5%, and the Nasdaq lower by 1.5%. Investors worried about price evaluations and whether Wall Street's AI rally has reached its peak. Some software companies added to recent losses amid worries that rapidly advancing AI could disrupt industry stalwarts, explains Ross Mayfield, investment strategist at Baird Private Wealth Management.
Yeah, so markets are wobbling a bit lately, really as a result of the concentration in big tech. This has been a couple of days, if not a couple of weeks now, of headline weakness, but strong breadth, the S&P equal weight outperforming, nice performance from banks, from industrials, but that's having a really hard time overcoming the weakness in software in particular, which has been really hit hard and is now in a full-blown bear market on fears that AI can basically take its job, that these software as service companies don't have nearly as strong a moat around their business models as might have been envisioned just a couple of years ago.
Alphabet fell more than 2% ahead of its quarterly results after the bell. Shares were volatile in after-hours trading, falling 6% before recouping losses after the company said it was ramping up AI spending. Investors weighed this against Alphabet's surging revenue and profit, both of which beat expectations for the fourth quarter. Advanced Micro Devices tumbled more than 17% after the chipmaker forecast quarterly revenue that disappointed investors and suggested it is having a tough time competing against AI heavyweight NVIDIA. NVIDIA itself fell almost 3.5%. And shares of Palantir slumped almost 12%, reversing sharp gains from the previous day that were driven by the AI data company's strong quarterly sales. Limiting losses in the S&P 500, shares of the drug maker Eli Lilly rallied about 10% after the company forecast 2026 profit above Wall Street expectations.
And the Anthropic-linked sell-off was not limited to Wall Street alone. Global equities slipped on Wednesday as investors weighed the potential downside risks from artificial intelligence with Anthropic's launch of plugins for its Claude Cowork agent and how it could disrupt those industries. Meanwhile, safe haven demand surged, sending gold towards its biggest two-day rally in more than 17 years. Take a look.
Global shares fell on Wednesday. Investors sold off as concerns grew about the negative shock from AI to key parts of the wider tech sector. Global providers of data analytics, professional services and software were particularly hard hit. Market watchers worried about Anthropic's launch of plugins for its Claude Cowork agent and how it could disrupt those industries. One analyst said it poses a major challenge for firms to come up with solutions which may involve partnerships with Anthropic or OpenAI. It comes a day after US benchmark indices dropped 1%. That was led by sharp falls in software stocks like Salesforce and Adobe. European stocks pulled back from record highs, with the Stoxx 600 down 0.2%. European equities were further hit by a huge slide in shares of Novo Nordisk. They fell just under a fifth after the weight loss drug maker gave a gloomy outlook for the year. Shares of some software and data-related companies also slipped in Asia, although the overall selling pressure wasn't as strong in the region given its long-term dominance in hardware manufacturing. Elsewhere, gold headed for its biggest two-day gain in more than 17 years. Precious metals extended their recovery from a massive two-day sell-off which saw silver down by as much as 30% in a day. Spot gold climbed back to the $5,000 level and was up 3%. That ensured gains of roughly a tenth over the last 2 days.
And shares of Danish drug maker Novo Nordisk plunged as much as 20% on Wednesday after the obesity drug giant warned of unprecedented pricing pressure and forecast a sharp slowdown in sales. The outlook comes amid rising competition from copycat drugs in the US and renewed policy pressure from President Donald Trump's push to cut drug costs. Here's more.
Shares in Novo Nordisk plummeted as much as 20% on Wednesday. That's after the weight loss drug maker shocked markets with its gloomy outlook for the year. It forecasted that profits and sales could drop as much as 13% in 2026, after years of double-digit gains. That compared with a sales rise of 10% in 2025, and analysts had forecast only a 2% decline over this year. CEO Mike Dudestar cited unprecedented price pressures as a cause. US President Donald Trump's drive to cut drug costs has added more challenges, with Novo already facing strong competition. It's also rivaled by copycat drugs in the US. Estimates suggest 1.5 million Americans use compounded versions of GLP-1 weight loss medications. Wednesday's share drop wiped over $47 billion off the Danish company's market cap. Novo also said that there were now far more companies looking to break into the obesity drug market, and that it couldn't promise a return to the, quote, extraordinary growth rates of recent years. Wednesday's events also undid a promising start to the year for Novo's stock. It had risen on strong sales of its new Wegovy pill.
Amazon is doubling down on artificial intelligence in Hollywood, planning to use AI tools to accelerate how movies and television shows are made. The move comes even as writers, actors and production crews warn that automation could reshape the industry and threaten jobs.
I know you all say I'm not real, but who cares?
Amazon plans to use AI to speed up the process of making movies and TV shows, even as Hollywood fears AI will lead to job cuts and permanently reshape the industry. Reuters has learned exclusively that Amazon is planning to launch a closed beta program for AI-driven filmmaking tools in March, inviting industry partners to test the AI tools, and expects to have results to share by May. Amazon's AI studio will fast-track certain processes to make TV shows and movies more efficiently in the face of spiraling production budgets. That includes improving character consistency across shots and integrating AI with industry-standard creative tools. The initiative is being led by veteran entertainment executive and AI studio chief Albert Chang, who described it as a startup operating under the two-pizza team philosophy of Amazon founder Jeff Bezos, which means keeping the group small enough to be fed by two pizzas. Chang told Reuters that while he fundamentally believes AI can accelerate innovation, it won't replace the, quote, unique aspects that humans bring to the creative process. The move to adopt AI comes as A-list actors like Emily Blunt have expressed fears about its rise, specifically creations like AI actress Tilly Norwood making their jobs obsolete.
And finally, America's legacy newspaper, The Washington Post, owned by billionaire Amazon founder Jeff Bezos, has announced sweeping job cuts, calling the restructuring painful but necessary as the historic newspaper faces mounting financial and political pressure. A major shift for the publication, once famed for its Watergate-era reporting. The move comes as traditional U.S. media outlets navigate industry disruption and continued attacks from the President, Donald Trump. Now, the Post did not disclose the number of job cuts, but the New York Times reports approximately 300 of its 800 journalists were laid off. Now, interestingly, in stark contrast, the New York Times announced on Wednesday that it gained more than 1 million digital subscribers in 2025, bringing its total to nearly 13 million and confirming its dominant position in the US media market. And as we close the show, it's time to congratulate the winners who had participated in the News9 budget poll. Remember, we had asked in our Budget for Bulletproof Bharat segment viewers to make predictions about what would emerge in the budget. They voted their answers and predictions with a yes or no option spread over 10 questions and 10 days. And here on the screen, you have the winners, 3 winners who predicted every single one of those questions correctly and now walk away with those amazing Amazon vouchers. We have Sampath V, Shravran Desai and Vinod Katiyar. That's right, Sampath V, Shravran Desai and Vinod Katiyar. Congratulations to all 3 winners who did correct all the questions and their answers correctly ahead of Budget 2026. And with that, we come to an end of this edition of Morning Brief at 9. Thank you so much for watching. News continues right here on News9.
Bangladesh is on edge. Protesters also targeted symbols of Bangladesh's political history.
Mr. Yunus is being the new Jinnah of Bangladesh.
What defines this mob? Who are these people? Where do they come from? Pratham Alo, the newspaper, has also called it a terror attack.
Yunus is the Osama bin Laden of today's world.
The state has no strength, or those who are on the street are the state themselves. There's nothing called spontaneous mob. There's a theory called you keep the pot boiling.
Yes, we are in Philippines.
Ever wondered what makes the night come alive? Where flavors, lights and laughter dance in harmony. When the sun sets, stories rise. Of kitchens, cocktails and charisma. What makes your city's night so happening? Let's find out.
Good service, good food and a good location. You need to explore, you need to experiment.
But they will never forget how they felt when they came to your restaurant.
Being a chef, it's my priority to deliver taste in a plate with good presentation, unique innovation. My definition of mixology would be to get people drunk in a safe and happy way. Don't drink on the job, that's for sure.
Mixology, you can play around with anything. You can create the stories, you can create the recipes.
Let's cheers on that note with our friendship.
Indulge in the finer things in life with